This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. So I did a write-up for you this morning. Ceasefire. Okay, Trump called off the bombs right before the mass extinction event and agreed to a 2-week ceasefire, or so the futures think. So we are ripping the upside or right tail risk engaged. We've gone from negative gamma to positive gamma and left a big old gap in between. So we have a strong green day on this Wednesday, April 8th. Oil is coming back down, but let's see how it serves with that $91 crude magnet. It's only down to 95. Sorry, but that's just not impressive enough. We're going to have a very, very sticky oil complex. We'll see if VIX actually gets down to my 22 level and obviously my 6,800. That was the range talked about last week. And we are obviously there. So 6666, we almost tagged it. And the 21-day serving as resistance until boom, we got the manipulation news last night, and we would love to believe it. We would love to believe it. However, ceasefire, okay? Let's just say color me skeptical. So I wrote this morning just to kind of remind, I know some of you are hurting, and that's one thing I want to address. But the other is that binary events are not easy to call or trade with conviction. Some would bet all kinds of money that Trump was going to talk go. He talks of take it out of civilization. Some believe, like his book, whatever, Art of the Deal, it's escalate to de-escalate. It's all game theory stuff. Not my game, as you know. I look at the charts. They were forming some bullish end flows and motivations, but there is no guarantee. So protecting on the downside is smart. Buying cheap upside calls and call spreads as a hedge in short duration is also smart. Big picture, you cannot convince me this war is done. Nope, you can't. And from my volatility read, even before the events of the year started, you know that I had a volatility regime from March to May, and we would get a reprieve last week and this week. I called it stabilization into bull trap, and that's what we got this week. So on this particular news, ironic, I don't know the macro that's going to trigger the read, but the read was stabilization into end of this week. So now positioning, this is what I said, mechanical buyers can step in above that gamma flip level. So we could be a little sticky in this 6,800 level. They do have equities to buy in the $47 billion range. Anyway, this was what I had said. Upside calls or call spreads and Mag 7 names give you the hedge upside to your downside protection. I don't make the rules, but I can remind that a really basic one is trends need fundamentals for conviction. And what do we have this morning? Seriously, to keep the bullish momentum in play, we've got mechanical buying, yes, but we don't have fundamentals. What are Vegas odds is what I asked about. A lasting, real lasting truce, trusted truce. What are Vegas odds? That's how I left it. This is last week. Okay, now real wars and trade wars. This is what's going on. This is day one of the ceasefire, and every side has breached it. U.S., Iran, Israel. Here is a very dirty laundry list. It goes on and on and on all night long. Lebanon, oh my God, Israel's just pummeling it, etc. There is also no ceasefire agreement. None. Zero. Nothing is binding. So you have to get this in place before you can even start to trust, right? De-escalation and a binding ceasefire agreement. And what are the Vegas odds, again, that Trump, Hegseth, and Netanyahu will agree to these 10 points? If I was a betting woman, I'd say very, very small chance. So what do we got? Saudi Arabia's vital east-west oil pipeline carrying crude from the Gulf to the Red Sea for export has been attacked. That's about 7 billion barrels a day. So we've got more oil coming offline, which is why oil is staying sticky above that 91 crude. And basically now Trump is taking advantage of the opportunity to escalate into a trade war. So what do I mean by that? He came out with this saying, anyone who's going to supply weapons to Iran will be immediately tariffed. Well, who's that? Okay, Russia doesn't care, but China could. Anyway, we have no lack of risk. There's no lack of risk. None. Zero. But we are at some key levels, and that's what I wanted to talk about. So you can kind of see the risk is still real, but so is the gap up. Here is your Mag 7 ratio from this bullish harami last week into what I consider resistance of size right here. And then that is where we peter out. We've got the same thing. Here's my MAG 7 ratio with a rollover. It hasn't even tagged the trend line. All it's doing right now is sitting on some support and pushing sideways inside follow through weak. All right, so here is SPX. We're not quite into that 6,800 range, but that's pretty close. So big gap it left behind on ceasefire news, on terms that will never, ever be accepted. And they are also making sure that Iran is also making sure that Israel, including Lebanon, ceasefire, which is also not going to pass. So it's going to be hard pressed to get this to focus and follow through. We did yesterday already. They were positioning aggressively above this trend line for SPX. And obviously we're right about here today, this neck of the woods. So let's go back to that. Here we are right here. So you've got 67.85 is the current print. 67.77 would be the area of pullback, but I actually think this can still move into that 6,800. Here are my lines. That's what I wanted to show. Beautiful. Do you remember? I said, if then we could push all the way up into 68.07, and I still am bearish. We could push all the way up into 68.70, and I'm still bearish. So this reflexive bounce of size, we had one here, and then we rolled over, and then we're having another one. And at some point, we're going to really get to test the thesis. The thesis is that if this is a left shoulder and this is a head and this is a right shoulder right here in this neck of the woods, then we should start to see this peter out and roll over. If we have a head and shoulder continuation, it's extraordinarily bullish. I don't see that. But my point is, if we were to see a continuation of this head and shoulders, which basically doesn't fall, in other words, it comes up here, it bases, and then it moves higher, then we go into 8,000. I don't see that. We'd have to have the dollar drop sizably in order to see that. That was my 8,200 upside. You get an upside, you get a downside, upside, but you need a dollar that drops. And we don't have that. We still have a dollar that's pretty firm. Sideways is still in play. So I'm not betting we're going to take that out. And we are for sure going to have to be vigilant on both directions. Gap higher, gap lower. There just isn't going to be a lack of headline drama. If this is not your jam, you don't have to trade headline drama. You don't. Or if you're long, you add protection. If you're short, you add some cheap upside calls into a binary event. And you risk losing that money if it's going to offset some of the pain of holding only a particular commitment or market direction. We don't have that. We have massive headline risk. We have massive chop. This is not a trend trader's environment. This is a chaser. These are for pro advanced option traders who know what they're doing and know the risk. So don't risk more than you're willing to lose. And even though we're absolutely not trusting this ceasefire, I mean, literally, I don't trust it. Ceasefire my arse. They're still binary events and they're not easy to trade. So big picture, zoom out. You don't have to play. You're going to be wrong. And unfortunately, in this type of market where you have a very manipulative administration, you're going to get whiplashed. It's going to be part of it. So trade smaller. You don't need to have big size on. We have not finished the bounce to roll over. If we form a big head and shoulders in this SPY, it will be into earnings, quiet, and then fall. I would expect this fall to continue through the fall, like into 2026 November timeframe, end of year timeframe. The only thing that I'm bullish about is if the dollar was to fall strongly, then we would have objects appear larger type of effect. Right now, the risk off in the dollar is still keeping it bid. The 10-year, even if it popped lower on rate cut expectations, it is still bid. I don't see a reason for oil, dollar, yields, or volatility to come down meaningfully unless we have true lasting peace, Iranian oil. So I don't think this is going to end. Anyway, long story short, we have market stabilization into the end of this week. And then I think we can start to revisit shorts. But right now we've got at least a reminder of how this market is volatile, both directions. Keep your hedges,
buy cheap upside calls. That's my best advice. That's what I wrote last week and continue to see as viable. It's until we get into this cascading waterfall, and we didn't. We broke down 65.08 and then we had intervention, boom. And today we had intervention, boom. Can we trust either of them? Oh, but mechanical buying is in the house, and it's going to stay in a positive gamma routine until we have the next tape bomb.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.